Hi there everybody, this is Terry Ryder from hotspotting.com.au and this is my monthly live feature, the live Q&A, your chance to throw your most burning questions about real estate around Australia at me, and I'll do my best to answer them. In front of you, you should see a comments panel if you've got any questions about any of the issues concerning real estate across Australia, any locations you might have questions about, places you might be thinking of buying, or places we already own real estate, you wonder what's happening with the market there. It's not going so well, as any prospects to improve. If it's going well, is it a good time to sell or should you hang on? Any questions at all? If you've got a question about location, it would be helpful if you could give me a little bit of context rather than just name a town or a suburb. Perhaps give me a little bit more information. Sometimes a place you may name maybe one of 3 or 4 with that name around Australia, because it's a big country and many places with the same name as places in other states and territories. So the more information you can give me about what you're asking, the better it is. Until questions start to come through, I'm going to talk about some of the issues that are around at the moment. Firstly, prices. Prices, the most burning topic, or the topic that mainstream media is most obsessed about. What's happening with prices, and with all those misleading and inaccurate headlines about prices falling across Australia. Media's obsession with what's happening in Sydney and their tendency to extrapolate the Sydney situation into a national situation, which isn't the case. But the thing about prices, and whether prices are falling or rising, on how much they're rising and falling, very much depends whose figures you believe, because we have many different sources of price data in this country, and they very seldom agree on how much prices are moving in a given market. If we take Sydney and Melbourne, for example, the 2 markets which had the big booms and are now subsiding. The most quoted source is CoreLogic, mainly because they pump out press releases on a daily basis in their endless thirst for publicity. And according to CoreLogic, Sydney and Melbourne house prices are down about 9 or 10% in annual terms, but other sources very strongly disagree with that. For example, the latest figures from the Bureau of Statistics, the official source of information in this country, has Sydney down about 5%, which is about half the rate of decline that CoreLogic claims. SQM Research, which is a source of real estate information that I greatly respect, they have Sydney down 5.8%. In terms of Melbourne, CoreLogic says about 9% in annual terms. The Bureau of Statistics says 2% for house prices, and SQM Research says 3%. In terms of, I'm just looking at the SQM, the latest figures from SQM Research, their figures for how much prices rose and fell in the various capital cities across Australia last year in 2018. They have Canberra up, showing solid growth in houses and strong growth in apartments. They have Brisbane up a little bit for houses and slightly down for apartments. They have Sydney down 5.8% for houses, but only 0.7%, so less than 1% in terms of apartment prices. Similar scenario for Melbourne. They have Melbourne house prices down 3%, but they have Melbourne apartment prices up 4.5%. The one market that everyone agrees is down a lot is Darwin. It's a bit of a basket case, has been for a few years, and still not showing any signs of recovery. Adelaide's sort of a little bit down with house prices and a little bit up with apartment prices. Perth, according to SQM Research's figures, it's an interesting one. There's a lot of disagreement about what's happening with Perth. Because CoreLogic has Perth house prices down sort of 4.5% still, whereas SQM Research's figures I've got here in front of me has Perth down by just 0.5%, almost bottoming out. The Bureau of Statistics figures were very similar, and the figures from the Real Estate Institute of Western Australia recorded a small rise in the median price for Perth in October, another small rise in November, and no change in December. So the general theme is that most sources disagree with CoreLogic figures. CoreLogic figures seem to be the most extreme and negative figures, and I'm very suspicious of their data. I think they might have a dodgy algorithm working in their computer, but they always seem to come up with data that's a lot more extreme than all the other sources, including Domain, the Bureau of Statistics, SQM Research, and the Real Estate Institute. So unfortunately, they're the source that pumps out the most press release information, so they're the one most quoted in mainstream media. Okay, so Marissa is asking about Tamworth. What do you think about Tamworth in terms of future growth? Well, quite optimistic about prospects for Tamworth. Marissa, it's one of those places that I think right now property investors should be paying more attention to, because in New South Wales, for example, there are lots of really strong growth markets. It's just that none of them are in Sydney anymore. They're in regional New South Wales, and lots of regional New South Wales markets are strong, somewhere between solid and strong in terms of their local economies and their prices. And Tamworth is one of those places. There's last time we looked at the figures for Tamworth, which was recently, sales activity was rising, vacancies were low, and prices were rising in Tamworth. So I think it's got good prospects. It's one of those really solid, well-rounded, diverse regional centres with lots going on. Sales activity is strong, prices are rising. It's always steady. It's one of those places that seldom booms, but it seldom busts as well. And that's true of many of the regional centres of New South Wales, which might include, Dubbo, Orange, Wagga Wagga. Newcastle has been very strong, and its price growth, probably the number one market in New South Wales in the last 12 or 18 months. Probably past its peak now, but the towns in the Hunter region are rising, and Tamworth is one of those places where I think it's worthy of greater attention from the observers. Michael is asking about Redcliffe in Queensland. That's the Redcliffe Peninsula in the northern suburbs of Brisbane. Yeah, I think it's a market that's going pretty well. It's been undergoing a lot of change. You're referring to gentrification in that area, Michael. That's been a process that's been underway on the Redcliffe Peninsula for quite some time. Historically, it's been considered a bit of a down market area, sort of almost sea change for battlers, I suppose, but it's changed a lot. It's been gentrified gradually, steadily over the last, say, 10 years. There's a lot of lifestyle elements been injected into the waterfront there, a lot of new development, particularly with apartments, and the standard, I guess you could say, has been lifted substantially over that period. And now, of course, more recently, we've had, finally, after 50 years of promises, we've had the new rail link put in. So that's changed the appeal of Redcliffe, and now we're seeing more and more people showing interest in the Redcliffe Peninsula, the suburbs there, and there's evidence that sales activity is picking up and prices starting to grow there. And that whole northern Brisbane area is part of the Moreton Bay region local government area, which I think is one of probably the strongest market in Brisbane at the moment. I think Brisbane's going to do a lot better this year than it has done in the past few years for all sorts of reasons, and Redcliffe's going to be part of that. Lara is asking about Russell Island. Will it ever boost? Land is cheap there. Yeah. Look, I don't know. Look, Russell Island is one of the islands in Moreton Bay, just off the coast of Brisbane, and yeah, I don't know, those island markets. Obviously it's a lifestyle that appeals to some people, but I think islands off the mainland don't tend to boom. I think there's some evidence that if they ever decide to build a bridge to some of those places, that's when the market takes off. It's the separation, the fact that you've got to take a boat to get there, that holds back markets like Russell Island, I think, Lara. No, it's the islands that actually have an actual bridge linking to the mainland that tend to go ahead in terms of their real estate market. So I just don't know that Russell Island's ever going to, in the foreseeable future, take off. David is asking for my thoughts on Townsville. It's one that I speak about a lot. I get asked a lot of questions about Townsville, David, and it's one that we take a very strong interest in. And the reasons are this. What we see for Townsville's future is very similar to what's happened recently in the Sunshine Coast for similar reason. Two Queensland regional cities with big spends on infrastructure and other investment, changing the nature of those cities. The Sunshine Coast is further down the track with the process, $20 billion plus in investment in infrastructure and other developments on the Sunshine Coast. It started a few years ago and it's more advanced than Townsville is, but what we've seen is big uplift in property prices in the Sunshine Coast in the last 12 months. Many suburbs have had double-digit growth in their median prices. Now, we expect the same thing to happen with Townsville. Townsville's been through a downturn. It's had 3 or 4 tough years for all sorts of reasons in the local economy, but it's basically a very solid city with a solid economy, and it's coming into a period of prosperity. I visited Townsville just a few months ago to speak at a seminar and found that local people were a little bit, I don't know, not really believing that it's ever going to change. Well, it is going to change. It can't help but change because of what's happening and coming up to happen in terms of this. There's even more being spent, and I mentioned $20 billion on the Sunshine Coast. Well, when I add up all the projects that are in the pipeline for Townsville, some of which are already underway, it's $25 billion plus. And Townsville is actually a smaller city in terms of population in the Sunshine Coast, and the impact, relatively speaking, is going to be more. So I think Townsville is going to take off in its real estate market. I think it's going to really start. We're going to see the signs of that in 2019. So if you're from Townsville, David, or you own real estate there or thinking of it, I think it's not a bad place to target. The one issue for Townsville for real estate investors is the cost of insurance, because it's up there in the north, which tends to get whacked by cyclones fairly regularly. In fact, the weather's pretty wild up there right now, based on what I saw on the news half an hour ago. Kristen's asking the question, can you still buy a great investment property for $300,000? Yeah, actually, I think you can. I think you can. I think there's plenty of options for that right now. And one of the reasons for that is that most of the markets that are really strong at the moment, and there are plenty of them around Australia, contrary to what media tends to imply with its obsession with Sydney and extrapolating that across the nation. There are lots of growth markets in Australia right now. The thing is, most of them are in regional centres. 2018, all the areas with the strongest price growth and the strongest activity were in the regions: regional Victoria, regional Tasmania, regional New South Wales, and a few places in regional Queensland. Now, I think we're going to see that again in 2019, even more so. It's going to be about the smaller capital cities and about the key regional centres, particularly the regional centres. And in many of those places, you can buy good property for $300,000. A couple of examples would be Bendigo and Ballarat in Victoria, where there's there are suburbs with median prices below $300,000. Other regional centres in Victoria, regional centres in New South Wales. I was asked a question just a few moments ago about Tamworth. That's a place where you can certainly buy a property for $300,000 or less. Many other parts of regional New South Wales, the same. One of the cities I think is going to surprise people this year is, amongst the capital cities is Adelaide, and there are parts of Adelaide. There are a number of suburbs up in the north where median prices are below 200,000. It's the cheapest capital city real estate in Australia, and some of the best rental yields as well. Down market certainly, but very affordable. Adelaide's an affordable city. You can certainly buy a good real estate in the 300,000s and less in those areas. So the general answer to your question, Kristen, is yes, certainly, definitely. And this year, I think it's those cheaper areas where you can buy property for 300,000. Those are the ones that are going to be the strongest markets and the ones that are going to be showing the best price growth moving forward. So, if you want to find out more about that, I would suggest our Cheapies with Prospects report. We have 2 editions of that, a city edition and a regional edition. You can find them on the Hotspotting website. The top 5, national top 5 Cheapies with Prospects city edition, national top 5 Cheapies with Prospects regional edition. Give you some of the places we think are the best prospects for buying real estate in the price range that you mentioned. Okay. Anne's asking about Ipswich, what in particular, Anne, would you like to know about Ipswich? There's a lot of, we've got a report on Ipswich and it's about 12 pages long, packed with information about the Ipswich economy, population and demographics. What specifically do you want to know? Because I could spend the next hour just talking about Ipswich. What specifically is your question? As I said at the beginning, sometimes you just need a little bit more information from you before I can give you a definitive answer, because that's a very general question on a very big area. The city of Ipswich takes in a big chunk of the southwestern portion of the Brisbane metropolitan area. There's a lot going on there. But if you give me a little bit more detail about what your question is about, I can give you an answer. Michael, thoughts on the Warrnambool market? Yeah, I know Warrnambool pretty well. I've been there. We follow it. We track it with our daily research, like we do in most of the major markets around Australia. But it's one we're always interested in because Warrnambool's a good place. It's a seaside regional centre for southwestern Victoria. It's an important place. It's always steady, but in my time, I've never seen it boom, but it seems to be picking up right now. There's plenty going on in that part of Victoria. There's lots of wind farm developments, for example, big ones, some of them billion-dollar projects. Those sorts of projects tend to create economic activity and jobs in an area. So, it's worth keeping an eye on. I don't, if somebody was asking me where's the best place to invest in Australia right now to buy real estate for future growth, I don't think Warrnambool would be the answer. It's a solid place. Anyone who owns real estate there, they're probably not going to lose money. It will grow gradually in value over time and do okay. But I think I don't ever envisage a time when the answer to the question, where's the best place in Australia to buy real estate, would be Warrnambool. But solid place, always steady, unlikely to boom. Harry, thanks for your feedback, Harry. People have been predicting a Brisbane boom every year since 2012. Nothing much has happened. Okay. And then you ask about the inner city unit market rising, etc. Okay, well, first of all, Harry, I think you're right. A lot of people have predicted a Brisbane boom. And I think quite simplistically, the reason why they suggested Brisbane was going to boom was because Sydney was booming and then Melbourne boomed, therefore, obviously Brisbane must. Well, no, it doesn't work like that. The reason Brisbane hasn't followed Sydney and Melbourne into a boom is because the factors that drove the booms in the 2 biggest cities weren't present in Brisbane. It's all about the local situation, the local economy, population trends, economic activity, jobs creation, and in particular, infrastructure spending there. Brisbane's been a bit weak in all those areas, whereas Sydney and Melbourne have been very strong in those areas. I don't think it's true to say that nothing's happened in Brisbane. It has had periods where some section of the market have done pretty well. And if you look in detail about what's happening in Brisbane, for example, if you look at, say, the Moreton Bay region, suburbs like Caboolture, Morayfield, Narangba, those markets have been above average. They haven't boomed, but they've been active markets, and prices have been growing at rates well above the Brisbane average. You see those figures published, like the core logic figure from Brisbane for Brisbane will be annual growth of 1 or 2%. And it's easy to infer from that absolutely nothing's happened in Brisbane. Well, it's not true. There's sections of the market that have done much better than that, including the Moreton Bay region up in the north and other sections of the market at different times. We've just updated our report on Redland City, which are the southeastern suburbs of Brisbane over on the Bayside. And many of those suburbs are showing growth above the average for Brisbane. Not boom time growth, but very solid growth. So Brisbane's been doing that sort of thing, but overall we haven't had a boom in Brisbane yet. I think it's going to be better this year because the economy's improved, infrastructure spending is lifting significantly. That's been missing, but now that's starting to be present. The last state budget had infrastructure spending for Queensland of about $40 billion. Now, it's not all going to happen for Brisbane, but a big chunk of it is. We're starting to see that happen. The population data, interstate migration, is starting to favour Brisbane a lot more strongly again than it has recently. So all those things are falling into line. A lot of people are thinking about Brisbane because of the price comparison. Obviously, Sydney and Melbourne no longer booming, and their price is very high. People are looking for somewhere more affordable with better rental yields. A lot of people are leaving Sydney because it's very expensive, and many of them are moving to southeast Queensland. So I just think we're going to see better things in Brisbane this year. Your question about the inner city unit market, there's a report out this week from it was Moody's Analytics, where they're predicting that Brisbane is actually going to lead capital city Australia on growth in apartment prices over the next couple of years. They're obviously seeing, here we are. I knew I had that article pretty handy. Here we go, this article here. Brisbane apartment market forecast to see stronger price growth in 2019, says Moody's Analytics. Now, it's a forecast, and Moody's Analytics is just as likely to be wrong with their forecast as anyone else. Most forecasters get it wrong. They get treated in media as if their forecasts are fact. They're not. So often wide of the mark. But anyway, for what it's worth, the latest report from Moody's Analytics forecasts strong recovery in the Brisbane apartment market. So it sees that the oversupply being soaked up and prices starting to rise again this year and particularly next year. So that's what they're predicting. And it's inevitable that eventually that oversupply will be soaked up. Right now, the vacancy rates are still very high in the Brisbane CBD, Fortitude Valley, South Brisbane, West End, Kangaroo Point, Wollongabba. They're all got sort of 5, 6, 7% vacancies still. But what we hear is that it's been soaked up, and some forecasters looking further ahead see a return to growth, and one of those is Moody's Analytics, who's suggesting in their latest report that the Brisbane apartment market is going to move into recovery and start to show pretty good price growth later this year and into next year. So we'll see if they're right as time goes on. So Sam's asking a question which I can't really answer, and that is, which area would you think I should buy property for my superannuation for $500,000? Well, the problem, Sam, is that there's no one answer to that question. The answer depends on your circumstances. And I know nothing about your circumstances. well, I could get asked that question by 5 different people and there'll be 5 different answers, because it all depends on you and where you're at and what you already own and how much you earn and how old you are. But in terms of places where it would be good to buy property for around 500,000 right now with good prospects for growth, I guess that's what you're looking for, and we're also reasonable rental returns, I would suggest you could consider Adelaide as a very underrated city where you can buy really good quality real estate for 500,000, get good rental returns and good prospects for growth, because that economy is going from strength to strength and is going to really grab national attention when people start to realise what's on offer there. So Adelaide would be a potential answer. The city of Marion, Port Adelaide, Enfield, local government area is another to consider. In Adelaide, Perth has lots of opportunities to buy around those numbers. Recovering market has been, prices are down, have been in sort of minor decline over the last, say, 4 years, but now moving to recovery. So good time to consider buying in Perth. But be aware that the rental returns initially aren't going to be that good because rents are still weak, although they're starting to show signs of improvement as vacancies come down. Around Brisbane, there are good prospects to buy for those numbers. So I think Brisbane's going to do better this year. And then any number of regional centres. I've mentioned Ballarat and Bendigo in Victoria, many places in regional New South Wales. Good prospects. You can buy really good real estate in those numbers, good rental returns and prospects for solid growth. Then you've got Queensland. Sunshine Coast is the strongest market in Queensland at the moment. I think it's still going to be strong this year. Mackay has been leading the recovery of those central Queensland locations that have been through a tough few years because of their links to the resources sector. They're coming back, led by Mackay. You could buy very well in Townsville, I mentioned earlier, for those numbers. But which is the best place? Where you should buy, it depends on your circumstances, Sam, and I need to know more. I do offer strategy sessions for people with questions like that, where we could sit down and talk via Skype or Zoom or phone if you don't have Skype or Zoom available for up to an hour, and just find out more about your situation, where you're at, what you're trying to achieve. And after the end of it, say a 1 hour discussion, maybe I can give you a more definitive answer to that question. So if you're interested in that opportunity, you can go to the Hotspotting website and from the menu you'll find strategy session, and you could book in a time to have a detailed chat and really find a definitive answer question. And getting back to your question about you're saying, well, Ipswich grow and growth. Well, Ipswich prices grow, I guess, is what you're driving at there. Well, I think so. Brisbane generally, I think, is coming into a period of better growth. Ipswich will be one of those places that should do well for a number of reasons. It's a growth area, population growing. It's got the cheapest real estate in the Brisbane metropolitan area. So people seeking affordability will look at Ipswich, both investors and home buyers. Lots of big jobs nodes out there, and there's more and more being created. It's got a RAF base, for example, and that's expanding. It's got the Springfield Master Plan community, which is continuing to grow and create new infrastructure. It's got major industrial estate areas, one of which is where they're going to be building. Last year there was a federal government announcement, a $5 billion contract, I think it was, $5 billion, to build vehicles for the army, and that's all taking place in Ipswich, and it's going to create lots of jobs. That's what it's all about, ultimately. The areas where there's economy happening and jobs are being created, that's where you're going to get demand for real estate, and I think Ipswich is going to be one of those. So I think we're coming to a period where very affordable Ipswich is going to be showing some better price growth than it has in the last few years. Excuse me a minute. Okay, Simon, what do you think it will take for Sydney and Melbourne to start lifting price growth again? Look, the price correction that we're having right now, and how big is it, depends on whose figures you believe. As I said at the start, I don't think it's nearly as severe as media's. The media coverage is just rubbish at the moment. It's just terrible. Just negative sensation that a lot of journalists seem to be addicted to. They don't seem to care about the people, their customers, the consumers, their readers. What their readers are looking for is real information. That's all. And we want real information, accurate, balanced reporting, what's really going on. We're not getting it from mainstream media. The Australian newspaper, the Sydney Morning Herald, ABC television, their reporting of what's going on in the housing, it's just appallingly bad. And so it's very difficult to really find out what's going on. Simon, I think what's happening is that after 4 or 5 years of strong price growth, not the strongest we've seen in the history of Australian real estate, but pretty strong, inevitably the downturn has come. The booms don't go on forever. Those markets hit basically the affordability wall in all sections of the market. You get to the point where people just won't keep on paying higher and higher prices because the Sydney and Melbourne economies are still strong, population still growing, infrastructure spending still high. All of those factors that created the boom are still there, but they've hit the affordability wall, and so now prices are coming back a bit. It always happens that way. In 2004, around about then, after the last big boom, last time Australia had a national property boom, I would suggest, prices came back in the following year or so. Right now, we're going through that correction phase in Sydney and Melbourne. There are a number of forecasters, including Domain, Propertyology, SQM Research, Hotspotting ourselves, who expect that the decline in prices that we're seeing in some sections of Sydney and Melbourne, it's not right across the board. We're still seeing prices rising in the outer reaches of Melbourne, for example, and to a lesser extent, the outer reaches of the Sydney metropolitan area. But in general terms, prices are falling in those markets. The general expectation from sensible forecasters, the ones that make calm, rational, well thought out, well researched forecasts, as opposed to the attention seekers who like to forecast Armageddon to attract attention to themselves. The forecasts are for Sydney and Melbourne to sort of perhaps continue falling in the first part of this year fairly moderately and bottom out about the middle of the year. There's a few provisos there. Most sensible forecasters will present multiple scenarios, and it all depends on whether this happens or that happens. One of the big elephants in the room is the big banks and their attitudes to lending for home purchase. We're expecting them to ease off a little bit. They really need to. We saw APRA ease some of their restrictions, which took effect at the beginning of this month as the first step in that process. Notice the Reserve Bank and APRA and the federal government are urging the banks to just sort of ease off of their criteria. They've overcorrected in response to the Banking Royal Commission. They always seem to go too far in one direction or the other. They've overcorrected and they've got to ease off a bit because otherwise they're shooting themselves in the foot. Their multi-billion-dollar profits can't be written if they're not lending for real estate. And so they need to just lighten up a bit. That's what we're expecting to happen. So we're expecting that to be a factor. The other big elephant in the room is the federal election, which is coming up sometime soon, probably towards the middle of the year. And that will have an influence. But generally speaking, I think it's going to ease off in Sydney and Melbourne towards the middle of the year. But we're not going to see returning to strong price growth in a hurry. After it bottoms out, Simon, I suggest it's going to just be very gradual. Those sorts of booms don't come along every year, and it's going to be a while before price growth is that strong again. There needs to be some catch up with incomes. There needs to be rentals need to rise. Also, a number of things need to happen before Sydney and Melbourne are going to return to those strong rises again. But we're going to see moderate rises according to what most forecasters are expecting, perhaps in the second half of this year and into next year. So Annie, talking about Coromandel, that's a suburb of the Sunshine Coast. And I was just giving me some feedback saying that we had a discussion before Christmas about Coromandel. It very much helped me make a decision. Well, I'm glad to hear that. I hope it turns out to be a good one for you. But if you sort of have bought in that area or whatever you've decided to do, Sunshine Coast, yeah, it's, as I said earlier, strongest market in Queensland at the moment. Very much an economy on the move, a city on the move, really going places. Used to be just kind of a tourist resort town, which means its economy was a bit fragile and volatile, but it's broadened and strengthened. Got this big medical precinct now. It's got a university which is really thriving, all sorts of other things happening. And so it's a really good place for people to live and for people to invest, I would suggest. I haven't always believed that about the Sunshine Coast, but certainly now believe it strongly. Wayne's asking about Newcastle. Has the Newcastle unit and house prices peaked? Has there become an oversupply of units? Look, Wayne, as I said a bit earlier, I think Newcastle has been the strongest market, probably the strongest market in New South Wales in the last 12 or 18 months. It's been very good and some very high price growth in the house market in particular. And now it's starting to ripple out, I think, to other areas like Port Stephens, like Lake Macquarie, which is right beside the city of Newcastle, and then out into the Hunter Valley towns like Maitland and Cessnock and Singleton and Muswellbrook. I think, yes, I think probably prices have peaked in Newcastle. And if you're looking for growth in that area, I'd suggest looking out into those Hunter Valley areas I just mentioned, because they're a little bit behind Newcastle City in the cycle and just really starting to rise, looking pretty strong. That's where I'd be looking for growth moving forward in that area. In terms of oversupply of units, yeah, you kind of get that feeling. I mean, we haven't done a detailed study on it, so I can't be definitive about it, but there's obviously a revitalisation of the downtown area of Newcastle, the CBD. Lots happening there. The university campus, lots of urban renewal stuff happening and development of some major unit projects. And you sort of get the feeling that the developers always overshoot when they decide there's a big, exciting new opportunity, and they all dive in, and you usually end up with too many units. That may happen in Newcastle. I'd be a little bit cautious about that part of the market. In the Newcastle area, I'd be looking to the suburbs of Lake Macquarie or the towns out in the Hunter region, places like Rutherford and Cessnock, Maitland. There's a big uplift in sales activity, prices starting to rise. That's where I'd be looking, Wayne, in that area for growth in prices moving forward, because as you're sort of alluding to, I do think that Newcastle has peaked. Still going to be some growth this year, I think, but not as strong as last year. And certainly in terms of activity, sales activity, it has passed the peak in Newcastle for now. But long term, it's a good place to be, I reckon. It's one of the strongest, it's one of the largest cities in Australia, one of the top 10 cities in Australia in terms of population. it's very strong and diverse in its economy, and I think it's a good place to be. A lot cheaper than Sydney, which isn't too far away. So I think a lot of people are moving there or investing there for that reason. Okay. So we've talked about Tamworth, good place. Redcliffe, worth considering. Russell Island, not so sure. Problems with those island places because of the difficulty of getting back and forth and the separation from the mainland, the lack of a bridge. Lara, I think, is the problem there. Townsville, we've talked about. Ipswich, Warrnambool. So a good cross section. Brisbane generally, and we've talked about Newcastle, the Sunshine Coast. I find myself talking about the Sunshine Coast. I have to confess that I live, in the hills above the Sunshine Coast. It's kind of my local area. As in the past, I've actually included the Sunshine Coast in our no-go zones report, so it's an area that in the past I've recommended people not buy, but a lot has changed there. So lest you accuse me of local bias, it's because so much has changed in the local economy that's strengthened and broadened it, and it's turned into a really strong regional setting. There's a lot more to happen in the Sunshine Coast. The subsea cable from Asia, for example, the Maroochydore CBD development, which is huge, and it's going to be going on for the next 10 or 15 years. $500 million being spent on the airport, $1 billion being spent on the motorway. There's so much happening, and it's a good place to consider. Righto, Michael, what do you recommend that's neutral, positive rental yield, spending around 400,000 and 500,000 with upside for growth in the short, medium term? Well, I think, the best places to go for rental yields that allow you to be cash flow positive or neutral, buying at around 400,000 or 500,000. Some of those areas I've already talked about, Michael, but you may have just come in, so I'll talk about them again. We're talking about the smaller capital cities. To get the rental yields you want and those price range, I'd suggest Adelaide and Brisbane. Hobart, certainly you can buy in those price ranges and get good rental yields, but Hobart has already had a couple of years of strong price growth. The best time to buy there was a couple of years ago. And I do feel that Hobart's past, it's still going to show growth this year, but not as strong as last year and the year before. It's past its peak, I think. So I'd be focusing amongst the capital cities on either Brisbane or Adelaide, certainly for good buying and prospects for capital growth. Perth also should be considered, but you're not going to get the sort of rental yields you're looking for, if I understand your correction, Michael, because the rental yields are much lower than you would need to be cash flow neutral or positive at the moment anyway. Eventually, the rents are going to improve, but right now the rental yields are a bit poor in Perth because the vacancies have been high and rents are falling. That will change, but right now you're not going to get the rental yield you want. And the other places to consider are those strong regional centres, because in terms of buying in those prices, the best places to look are regional areas. You're going to get better rental yields than in the capital cities as well. So places where you can buy really well, good property for 400,000 to 500,000 and get, say, 5 or 6% or better rental yields. Regional centres like Ballarat and Bendigo and Victoria I discussed earlier. Some of those places in New South Wales, Dubbo, Tamworth, Wagga, perhaps Queanbeyan just outside Canberra, which is a good place to consider. It's a growth market for sure. Queanbeyan's worth considering because it's effectively part of the Canberra metropolitan area, but it's actually technically New South Wales. So first home buyers can get the New South Wales first home buyer incentives, and that's something that's boosting the Queanbeyan market, which is a bit cheaper than Canberra, but it's very close to the centre of Canberra because of it's actually Queanbeyan's actually in New South Wales, but it's closer to the centre of Canberra than many of the suburbs of the ACT are. So that's worth considering. Orange is a good place to consider in regional New South Wales for the sort of criteria you're talking about, Michael. Plenty of places in regional New South Wales to consider. Some places in regional Queensland as well. Sunshine Coast, some parts of the Sunshine Coast could fulfil your criteria. Townsville, Cairns. Cairns has got very good rental yields. It's a strong city. I noticed that Simon Presley of Propertyology is a researcher and buyer's agent I respect a lot. He certainly has a big rap on the prospects for Cairns. And yeah, as I say, some of the best rental yields anywhere in Australia are to be found in Cairns. I mentioned Adelaide, the northern suburbs of Adelaide, local government areas like Salisbury and Playford, some of the probably the cheapest real estate in capital city Australia, and some of the highest rental yields. You can get 6-7%, some of those suburbs. Down market, some people sort of will be put off by that, but if you can get over that particular mental hump, you can buy pretty solid real estate for 200,000, 300,000 and get really good rental yields. And I think Adelaide's a city going places, and it's going to show better growth than anyone ever imagined it would. So those are some of the possibilities, Michael. According to those, Kirsten, you've just asked any thoughts on Queanbeyan for around 300,000. Well, I've just spoken about Queanbeyan before I realised you had that question, Kirsten. So obviously I'm a mind reader, but I don't think you're going to be buying around 300,000. You're going to have to be spending more to get decent property in Queanbeyan because it's more expensive than that. You're probably going to be buying houses in the 400,000s, although you can buy units for around 300,000. But I would suggest to get the best growth prospects, capital growth, you probably should be buying houses on land. But the price range you mentioned, and for a decent rental yield, certainly there are units in the Queanbeyan market that can fulfil your criteria, Kirsten, but definitely a growth market, one to consider, I think. So Kevin's got is that a 680 square metre lot you're talking, because you've got 68 square metres there. I assume you mean 680. In Highton in Geelong, should I keep it or sell it? See, Kevin, that's one of those questions that it's impossible for me to answer without knowing about your circumstances. The answer to that question, 6 people could ask the same question and there'll be a different answer for each of them. It all depends on your circumstances. I don't know anything about your circumstances, and I'd need to sit down and have a discussion, such as in the strategy session that I mentioned earlier. I do offer as a service strategy sessions where we can sit down, talk about your circumstances and give you a decent answer to that question, but it's impossible to answer in these circumstances. Geelong, it's been probably the strongest market in Victoria over the last couple of years, stronger than anywhere in Melbourne. It's past its peak. We're still seeing price growth there. It's been fantastic, the price, and some of the suburbs of Geelong have shown median price growth in the last 12 months of more than 20%. So it's grown fantastically. It's past its peak, still going to be growth this year, but not as big as last year. Now might be a good time to sell real estate there, but I always believe that if you've got good real estate and you've got a long-term plan to grow your wealth, grow a portfolio, you don't sell good real estate, you hang on to it. That's how you don't make money in real estate by buying and selling. You acquire wealth in real estate by accumulating good real estate and keeping it. So if you've got good real estate, Highton's a good suburb. I could just open my book of maps because I always have them here next to me. But I do have some information in my head about Highton in terms of being a particularly one of the good suburbs, that it's in terms of location in the Geelong market, because I have sort of studied Geelong in some detail in recent times, and without knowing anything about the specific property that you've got there. Yeah, Highton map 634. Yeah, I mean, it's got a lot of good qualities, that suburb. It's got a lot of green space, for example. It's well positioned in terms of the main freeway heading north towards Melbourne. Just in terms, I think it's quite not bad in terms of proximity. Parts of Highton are right next to Deakin University, which is one of the major parts of the Geelong economy. And there's also other colleges in that area. So depending where in Highton it is, it's a really good place to own real estate, and I'd be hanging on to it. But as to whether you should buy it, sell it, it depends on your own circumstances and what you're trying to achieve as to the answer to it. Without knowing anything about your circumstances, Kevin, it's a bit hard to answer. I suggest, if you really want a good answer from me on that, book in for a strategy session. You can go to the Hotspotting website, go to the menu, find strategy sessions. If you'd like to find out more about that, Kevin, send me an email, ryder@hotspotting.com.au, and I'll answer as best I can. But I really can't give you the answer you're looking for without knowing your circumstances. I know if it was me and I owned real estate in that suburb, assuming it's good real estate, Highton's a good place to own real estate. I'd be hanging on to it if it was me, but I'm not you, so I can't really give you the definitive answer you want. Sam, yeah, good question. You're asking about the new airport area of Sydney for long term. Yeah, very good question and a good thought. Right now it's very hard to recommend places, hotspots in Sydney, but what I would suggest, people who want to invest and they for whatever reason want to invest in Sydney because they're from Sydney and they want to invest in their local backyard, yeah, follow the infrastructure trail, and that's always long-term going to be good for long-term growth. And the new airport, Badgerys Creek, that's a good place to consider, because when you get an airport, it becomes a massive, massive jobs node. It's not just the airport, it's all the stuff that springs up around it, all the commercial, industrial businesses that want to be close to an airport. You look at any of the capital cities of Australia, some of the biggest jobs nodes, it's not actually in the CBD. A lot of people think all the jobs in the CBD. They're not. The vast majority of jobs in any of our cities are out in the suburbs. The biggest jobs nodes are suburban, and a lot of them, one of the very biggest is the airport. In Brisbane, the biggest jobs node is what they call the Australian Trade Coast area, because we've got in Brisbane, we've got the airport, international airport, domestic airport, and the Brisbane seaport, all quite close together. That's a massive jobs node. The biggest jobs node in Queensland is there. So Badgerys Creek is going to be a massive jobs node. People want to live near where they're working, so people are going to be working in that jobs node are going to want to buy real estate as close to that as possible. So Penrith, Blacktown, Liverpool, those areas. Sam, that's where long-term there's going to be great growth because of Badgerys Creek Airport. And then there's going to have to be rail links built. There's going to have to be new motorways built. There's going to be all these commercial industrial businesses around it. And yeah, huge jobs nodes, lots of infrastructure spending. Long-term, that's the place to focus on in Sydney. I would suggest moving forward, taking a long-term view, which I'm very pleased to see that you're doing, Sam. Good thinking. If you follow that particular hunch and buy strategically, I think you'll do well in the long term. Okay, Suze, your question is, what would be a good area to buy through a super fund if you want a good rental return and capital gain, and you've got 10 years to retire? Is it too short a time frame? No, I think 10 years is a pretty good time frame. If you buy in the right place in 10 years, I mean, for example, if you'd bought, anyone who bought 5 years ago and say Geelong, we've just been talking about Geelong a little bit earlier, I mean, your values would have increased 70% in 5 years. Many parts of Sydney have grown in value 70% in 5 years. Now, it's not always that strong. Not all areas are going to do that, but if you invest well now, Suze, and buy in the right place 10 years from now, that piece of real estate should have increased mightily in value. And if you bought in the right place, you've got a good rental return. It's going to be paying its own way, not costing you money in your super fund. So you're around 600,000. Well, I don't know your circumstances apart from the little bit of information you've given me there. If it was me, I'd be looking, if I had $600,000 to spend, I'd be looking to buy a couple of pieces of real estate in 2 different locations. So you've got a little bit of diversity there. It's nice to have geographical diversity and diversity in the types of property you're buying. You could buy, we've talked a little bit tonight about a couple of markets I like, which are growing strongly. Good places, good long-term futures, Ballarat and Bendigo in Victoria. Just personally, I'm looking in those places to buy right now because I really like those regional cities, what they have to offer, their affordability, their rental yields, everything about them. Their futures are strong. You could buy 2 pieces of real estate for the money that you're talking about there. In areas like that, you could buy one in a capital city like, say, Adelaide, and one in a regional centre in Victoria like Ballarat or Bendigo. You get good rental returns if you buy the right properties. Good average properties, you should be getting 5 or 6%. So that's going to be helping to pay its own way. And 10 years from now, they should have grown in value quite nicely. So there are lots of different prospects that would answer your question. I would, for example, our Cheapies with Prospects report would suggest some of the areas that might be good for you to consider. We've got 2 editions, the regional edition and the capital city edition, where you can buy affordably in areas of good rental returns with good prospects for growth. If you buy the Cheapies with Prospects bundle, which you get both the reports for a discounted price. So that would be a good place to start in terms of locations to consider, because there are lots of places that answer your question around Australia, and it's impossible in the time available tonight to cover them all. So I would suggest the Cheapies with Prospects bundle on the Hotspotting website. Good value for money in terms of giving you ideas on areas you could invest to fulfill your criteria. Or you could do, as I've mentioned a couple of times, consider a strategy session conversation with myself where we sit down and talk via Skype or Zoom for an hour and really sort of zero in on what you're trying to achieve. Talk about locations that could fulfill your criteria, and then I would, as part of that process, send you some reports on the areas we've talked about that might fulfill what you're looking for. But I would suggest there's plenty of options. Adelaide's an option, Brisbane's an option, Perth is an option, Ballarat, Bendigo, regional centres in New South Wales and in Queensland. Lots of possibilities to fulfil those criteria, Suze. So there's no shortage of options, and you've got plenty of time. If it's 10 years to retirement, if you buy strategically now, using that money that you have, make some good decisions now. 10 years from now, you should be well set up, I would suggest. Okay, how have we gone for time? Gosh, time flies when you're having a fun conversation, doesn't it? We've been talking for an hour and it feels like 20 minutes. I'm happy to keep going if you've still got questions. Normally this live Q&A, which we do just once a month, normally it goes for about an hour and 15 or 20 minutes. And then my throat starts to hurt because I've been talking so much non-stop. Thanks for your feedback, Suze. Yeah, I think you've got if you've got $600,000 to spend with your super, you're in a pretty good position, and with retirement 10 years away, and you're in a pretty strong position to make some good strategic purchases and set yourself up for 10 years from now. And if you would like to talk about it further for a strategy session, send me an email, ryder@hotspotting.com.au, and we could take the conversation a bit further, because I think it's always smart when you're in that position to be willing to put in a bit of time and spend a little bit of money on getting really good advice and good research information. I think one of the reasons why people with property investment don't get the results, they don't always get the results they want, is because they skimp. They're not willing to put in the time or spend the money on good research and good advice. You need to be willing to spend money on a good accountant who understands real estate, a quantity surveyor to give you good depreciation advice, being willing to spend some money on good research information so you make good choices and buy in the right places and the right sort of real estate, and really make sure that, because you're trying to set yourself up for retirement, and you want to make the right decisions, and to do that you need to be willing to put in some time and spend a bit of money, so that the outcome you get 10 years from now is the one that you're really hoping for. And a lot of people aren't willing to do that, and I think that's why some people end up with disappointing results, and they buy in the wrong places. And there's plenty of people around Australia who have made those mistakes. So Michael has come back asking about the strategy session. You're asking if you do a strategy session, the areas that are suggested, do you provide reports as part of the session or as an additional fee? Generally what happens, Michael, is we kind of talk about things generally, and we start to narrow things down to particular areas that seem to be the right ones for you, for your circumstances. And I always willing to provide a location report or the relevant report as part of the process, not for an additional fee. So the answer is yeah. If you go through a strategy session, we talk for an hour, we come to some conclusions about locations, and I'll provide the relevant report as part of the strategy session, no additional fee required. So always happy to do that. Like people to go away satisfied with having had a good experience and actually got some really good answers and some really good information, so you can go away and make good decisions about where you're trying to head with it, Michael. So if you'd like to find out a little bit more about that, just I think the best way to start is to send me an email, ryder@hotspotting.com.au, and we can start a conversation that way and take it from there and see where it goes and how best we can help you make some good decisions about where you want to go with property investment. Okay, so yeah. Just wait a little while longer. We've been going for an hour and 5 or 10 minutes. Just while waiting to see if there's any more questions out there, I just want to run something past you. I was doing a bit of research for a particular purpose just yesterday, and just reminded me about prices, where prices are rising, where prices are falling. And the general media out there is that Melbourne prices are down, and CoreLogic reckons they're down 9%, and it's everyone's losing value in the property in Melbourne, according to the media. Well, it just isn't so. How much Melbourne prices on average have dropped depends on whose figures you believe. As I said at the beginning, the Bureau of Statistics figures in terms of the drop in Melbourne prices on average much lower than what CoreLogic is suggesting. I think CoreLogic figures are just overstating the situation, because SQM Research disagrees, the Real Estate Institute disagrees, the Bureau of Statistics disagrees. I don't think prices overall have fallen that much, but the outer ring areas prices are still rising and really strongly. I just want to give you some figures to illustrate what I mean. In the outer ring areas of Melbourne, here's some of the median price growth figures for the last 12 months for some of the areas of Melbourne. Say the Wyndham City area down in the south west heading towards Geelong. In the last 12 months, prices are up 15 or 16% in suburbs like Hoppers Crossing, Wyndham Vale and Werribee. Down in the far southeast in the city of Casey, suburbs like Hallam, Cranbourne North and Doverton, they're up 18 and 19% in the last 12 months. Prices still rising in those areas. Aren't going to rise that much in 2019, but in the last 12 months, that's how much they've risen. Clyde North is up 31%. That's probably a little bit misleading, but you can see that prices are growing very strongly in these areas in the last 12 months. That's how much they've grown. So contrary to that figure saying Melbourne prices are down everywhere, in these outer ring areas, that's not the case at all. Now, in the local government area, Whittlesea, up in the northern suburbs of Melbourne, the suburb of Epping's up 18%, Wallett's up 19%, Mernda's up 20%, and the suburb of Whittlesea and the local government area of Whittlesea is up 25%. We're saving the biggest figures till last. In the nearby local government area of Hume, which is beside Whittlesea up in the north, some of the suburbs up there, we've got Greenvale up 20% in the last 12 months, Craigieburns risen 20%, Meadow Heights has risen 23%, and Campbellfield has risen 24%. But the highest growth anywhere in the Melbourne metropolitan area is out west in the city of Melton. Now, that sort of down market area that most people would say, why would anybody want to live there? Well, lots of people do, because it's affordable and lots of people have bought out there. Masses of people have gone out there to buy, first home buyers and others on a budget. And in the last 12 months, prices in the various suburbs have risen by, most suburbs out there have risen more than 20%. Melton's up 21%, Melton South is up 28%, Melton West has risen 23%, Brookfield's risen 23%, and Kurrajong, not sure if I'm pronouncing that correctly, apologies for that, but it's risen 24%. So the strongest price growth anywhere in metropolitan Melbourne has been in the local government area of Melton out in the far west. A very strong market still, prices still rising out there, contrary to the media rhetoric, and most of those suburbs have been up by more than 20% in the last 12 months. So just trying to put a little bit of balance in the media coverage telling you that, it's a price disaster in Melbourne. It's fallen everywhere. Well, it hasn't. I've just given you 5 local government areas in Melbourne, all outer ring areas where prices are up 15%, 20%, 25% commonly across those areas in the last 12 months, and prices are still rising in those areas. They're not going to rise that much this year, but they're still rising. So just keep that in mind next time you read the headlines about Armageddon in the Melbourne real estate market. Sue's another question there. What are your thoughts on Medowie, New South Wales, from a capital growth point in the next 5 years? If you're still out there listening, Suze, could you just give me a bit more information about where Medowie is? I mean, I'm familiar with the name. I just need to be reminded, because with the research we do, we're researching the whole of Australia, many tens of thousands of locations. I feel like I should know a bit more about Medowie, but off the top of my head, I just can't quite place it geographically. So can you just tap in a little bit more about it? If you can do that right now, I can give you an answer. And in the meantime, I'll just have a look at some of the price information that I've got here in front of me. Okay. What I can tell you about Medowie, without being able to remember exactly where it is in New South Wales, median house price 535,000. It's up 13% according to these figures in the last 12 months. It's grown 22% in the last 3 years and 38% in the last 5 years. Its long-term growth average is 6.5% per year. The question is, right here, Port Stephens, of course. Yeah, thanks, Suze. Yeah, now I can place it. Yeah, the Port Stephens area generally has done really well in the last year or so. I guess it's caught the wave from the Newcastle market's been really strong, and those areas around it have I guess caught a ripple effect. I mean, it's a beautiful area, Port Stephens. I just remember, I mean, there's lots of beautiful areas along the coast of New South Wales, but Nelson Bay, the Port Stephens area generally is one of the most attractive, I think. Yeah, Medowie's near the RAF base in Newcastle Airport, which is an advantage because that's very much an area of infrastructure spending. There's big money being spent on the RAF base and the airport, and so lots of jobs there. Not a bad location. Close to that Port Stephens beach area, close to Newcastle, close to the airport and the RAF base. Yeah, it's going to do well long term. It's already shown some good growth recently, and it's probably going to show a little bit more. I mean, it hasn't grown massively in the last 5 years. Some parts of Newcastle have grown more, so there's probably, I would suggest, more growth to come there, Suze. And you know, its location, proximate to the things we've talked about, is going to help it to show growth long term. Michael, just referring to the areas I mentioned, the outer ring parts of Melbourne, do you expect them to drop as rental yields are super low? Yeah, rental yields have dropped as prices have risen. There's no doubt about that, Michael. And I don't expect that the price growth in those areas this year to be anywhere near as strong as they were last year and the year before. Those markets have passed their peak. We're still going to see growth. There's still growth happening. It's just not going to be as strong this year. In terms of, you know, growth in Victoria, it's going to be very much about the regional. We've already seen that in the past 12 months. Geelong, we've seen Pakenham, office of Warragul down in the southeast outside of Melbourne. We're going to see more in areas like Ballarat and Bendigo. Shepparton's going to do pretty well. Albury-Wodonga might do something. Warrnambool might have a bit of growth. But it's very much going to be moving forward. In terms of Victorian price growth, it's going to be about the regions. It's also true in New South Wales. And right now, probably in Tasmania, Tasmanian regions have done pretty well. Hobart subsides. I think we're still going to see some pretty good growth in some of the regional areas of Tasmania. Okay, so yeah, we've been going for an hour and a quarter. My throat's starting to hurt. So it's probably a good time to call an end for this month's session of the live Q&A. Thanks for everyone who's participated. There's been some really great questions tonight, not just about location, but about some of the issues. Some questions about strategy, which is good. I'd really be interested in having further discussions with some of you. If you're interested in a strategy session, As I suggested, you can go to the website hotspotting.com.au and find the section there on strategy section from the menu on the homepage, or you could just drop me an email, ryder@hotspotting.com.au. Those of you who have asked about locations, you can find out more by going to the website, the location report section. Most of the areas that we've been asked about tonight, we do have location reports on those locations. A location report is $55, and you're going to get sort of 6, 8, 10, 12 pages of information about those markets, why we rate those areas, why they might be good places to buy. So that's worth doing, spending a relatively small amount of money and getting some more in-depth information. And I think it's wise to do that. You really do need more information than I can provide in answering a one-line question here tonight. You need to do a bit more research, and our reports can certainly help you in that process. Okay, so thanks again for everyone who's taken part tonight. I always enjoy these live Q&As to get to communicate with people right around the country and talk about markets right around the country, as well as some of the issues in real estate. And it's always a fun thing to do. So look forward to doing it again, as always, on a Wednesday evening early in the month, once a month. So early in February on a Wednesday evening, we'll do it again. In the meantime, Tuesday nights I do a hotspot of the week at the same time, 6:30 in the New South Wales and Victoria, 7:30 in Queensland, different times in the other states according to the time difference. On Thursday, so tomorrow, I do once a week, I do my War on Misinformation broadcast, and I do other sort of one-off spontaneous broadcasts through this medium. So keep watching the Facebook page, go to the hotspotting.com.au website and have a look at the various reports we offer, because the secret to successful investing is good information. You've got to have good research information. Don't skimp and save in that area, because if you do, you're not going to be making the best decisions. And it's very important to make the best decisions. When you're spending a lot of money, you want to be buying in the right places and at the right time in those places. So we can help you with that. Annie, thank you for your feedback. And Suze, Michael, all of those of you who have given me feedback and thank yous, much appreciated. Let's do it again same time next month. Tune in tomorrow for the War on Misinformation, and stay tuned the Facebook page for Hotspotting for bits and pieces of information and other broadcasts that I do. That's it for now. Terry Ryder signing off. Thanks for your participation.